episode 172 of the Lumber Word, coming at you on the 17th of June, 2026. We've got a great guest today, recurring guest Matt Lehman. Matt, thanks for showing up.
Thanks for the invite.
And before we're going to go through a few things today. Housing starts. We're going to talk a little bit more about pine freight, housing starts, whether we're even worth looking at anymore. But and we're going to find out how people are building inventory. But before I did that, Charles and Matt, you guys both went to the FC Stone Westline Capital Southern Pine Hedging. Is it correct to call it a seminar, or is it what do we call it?
Webinar, a seminar.
Seminar.
And we call it a webinar because it's just a.
How was it? What did you guys? Is there any brown water left over there, Charles? After the boys showed up.
After day one, it was hard to find. I'm not gonna lie.
It's like cerveza during a soccer tournament with you, man.
He wouldn't buy it.
The strong will survive, my friend. The strong will survive.
So, tell me about it. What did you guys learn? Who was there? What happened?
Go ahead and lead away, Matt.
Well, I was pleasantly surprised that the boys had a lot to say, because I thought with as thin as that contract is and as little as the participation is, I thought their information was on point. It was clear, really clear for people to understand. But the biggest thing, I think the people that were there kind of knew what was going on. They weren't idiots to the whole concept, and they were. I felt like there was good participation and good understanding. And Charles got a little controversial there one time trying to start some crap, but.
Oh yeah,
he likes to mix it up.
Yeah,
I think he threw him a curveball, but they kind of bunted it.
So, quick question.
Matt,
Charles,
you think you're the only one that caught on to
that, Charles? Can you elaborate?
No, I don't think I'm the only one that caught it.
I can confirm that. I mean, I just, the thing is finance bro and real world typically don't commingle real well together. And I wanted to make sure that the people in the room that actually operate in cash, and this is somewhat of a nuanced new product, they had a firm grasp on exactly what they were saying, right? I mean, it was a request for a little bit more clarity in plain English. Is that a fair way?
So you reiterated that it wasn't a 2x4 16, that it was a 2x4 random contract, correct?
Yeah, but we still don't know what the tally is.
He did.
There is no tally. There is no tally.
He did bring it up though, and without an answer.
There actually is a tally. It's got a percentage to it.
Oh.
1, 2, 3, 2, 3. 1, 2, 3, 2, 1, 2, 3, 1, 2.
Question for you guys. So everybody there, like you said, Charles, finance bros, everybody else, was that the audience?
No, there was a lot. I mean, there was a lot of people that participate in cash, and I think that was the importance of.
So why? What's the biggest hurdle in these people opening an account and actually putting futures trades on that haven't done it yet?
Nobody wants to be the first.
And liquidity.
Get it wrong.
Everybody there needs more liquidity than the contract's offering. One guy said he thought, but the companies that were there probably represented about 30% of the lumber that's being traded in the country. They weren't the people that are doing it, but the companies that they represent was some pretty big volume. I'm not sure.
And I think I had to Matt's point, I had a couple follow-up conversations after, I think a couple days after, and it was simple. Like, why doesn't everybody just put on two? Whatever, pick two loads, assign the risk management to the risk, right? And go on about your day, right? If you want to be in a 50% hedge position, pick 4 loads, put 2 contracts on, whichever way you want to do it, and then we can have more participation. And once that happens, people like myself, that a major piece of what we do is sell forward and price lock out into the future up to 6 to 8 months, will allow us to not bid against ourselves, right? And I think that's the roadblock at the current juncture.
Yeah, I think everybody that wants to do something, like you just said, put 1 or 2 on. The only way you learn how to do something is by actually doing it. I mean,
100%.
you click the buy or the sell button, and then you start learning. It's called tuition. And waiting for something, that's called an excuse. And that means you're never going to do it. So,
There was one treater there, Ash, that said that that's exactly what they were doing. They took a small grip of cash and they considered it to be their education fund, and they
Yep.
expected it was just an investment in learning how to do it. And they're doing 10 lots and that kind of thing, but it's not any significant.
Yeah, but I mean that's good.
I mean, you got to look at, like, when you talk about it is, from an industry standpoint, the participants. I mean, at its core, futures contracts are, they're a price determining mechanism, and for the industry, whatever industry it is, it's a way to mitigate risk. And so it starts with, where are you in the chain? What is your risk? I'm a producer. My cost is $300. I can sell production forward for $600, but I don't want to do that because I'm probably going to get 700 or 800, and I wouldn't want to not get that 300. I'm a retail, and I'm a mill. I'm always long. I am always long product. Okay. I'm a retail end user. I am always short product. How short am I? Right? That's really what they're always trying to gauge. How short am I? And hey, I've got lumber sold at $600. I can buy it at $400, but you know what? I don't want to buy it there because I may be able to buy it at $300. Right? So understanding the step one, and then obviously, if you're an intermediary, we're in there where we're saying, hey, the relative value of X is this, and the futures contracts lets me lock in a guaranteed profit. We take risk every day with inventory, massive inventory risk every single day. Quantifying that is what we need to do. And then we're saying, how much risk am I comfortable with? Do I want to be long X million board feet, or do I want to be long X minus so much with a locked in profit? And so, across the spectrum, I think if more people understood what their position was in the chain and what their risk profile was, they would find more opportunities to use futures contracts, and we would have deeper markets both in spruce and in pine.
Greg, this is brought to you by Neurogum, which you must have eaten my whole pack before you just went through that. Wow, that was really good. I'm impressed.
I think you hit on something that was a very point there, and that is, the people that are short the market and the people that are long the market both think that at some point in the future is going to be better for them to wait. The people that are short think it's going to be a better buying opportunity. The mills think that I might be leaving $50 on the table, so I'm not going to lock in $75 worth of profit. And your job, you guys' job every day is to try to convince them that now is the best time to get it done. And you make a good case for why you should hedge today, why you should forward price today, but they all think it's a common belief in the market. The mills particularly, they always hope that it's going to be better, and there's really no basis for it. One of the things I pointed out last week at the meeting was the average move for the composite index that I have on an annual basis is $210. Southern Pines movement is an average of $223. But the average weekly movement of the composite index is 2 cents. The average weekly movement over 25 years for Southern Pine lumber is 13 cents a week. So the weekly volatility, you can't really make a big case for why it's going to be anything large, but you're looking at opportunities to participate in a $200 move over the course of a year. You're just trying to find when's the best time for the up moves and the down moves to happen. And like right now, we're in a very neutral place where it makes no sense to hope. The best play is is to put the hedge or the forward price on.
Can I speak on this a little bit?
Sure.
No, you're not allowed, Matt.
Please,
Just to
please
go back
elucidate. Please
to
elucidate.
what Greg was mentioning, you know, from my perspective, I had to learn the hard way, the tuition. I had to lose a little bit of money to learn some lessons, you know, 25 years ago when I first started trading futures. But basically now at this point in my career, I kind of look at it. It's a real simple thing. If you want to just think about it this way, whether you're a hedger or if you want to get long, it doesn't matter. Sometimes there's a price point in the future that you really think is a great hedge and you might want to go ahead and lay into it, right? And then there's other times where the board sells off, it gets a little too cheap. You might want to take delivery on it. So, I mean, I look at it from both angles, but the two lessons I've learned over the years are have a plan before you execute your trade, have an objective. So you've got to have a plan and you've got to have an exit strategy. And then you have to have a fail safe. So like if you're wrong, you've got to have a safety valve and out where you're like, okay, I'm going to cut my losses and just take my losses. I was wrong.
Time out. Time out. I just want to like question one thing that you just said there. So you're talking about a speculative position because if you're talking about taking a loss, this is speculative. It's not a hedge position. Is that right?
Well, on the long side in May, I was trying to take delivery of the May contract and nobody would exit with me. So I just had to get out of my position. It cost me $18,000. You know what? I'm moving on. I didn't plan on that. That was an unknown, right? It's like, hey, I like the value of the board at 570 or 580 or whatever it was at that time. I thought that'd be a good buy. Nobody would exit with me and I didn't want to stand for delivery. So I just said, screw it. I'm busy doing other things. I'll just take my loss.
Yeah, because
now, what if I had shorted the board?
To you.
What if I had shorted the board and all of a sudden the market goes on $100 tear? You know, at some point I'm going to have an exit strategy on the shorts. I don't need them anymore because my inventory is making way more money than I planned on. So I'm going to take a loss on my position when I get out of it, but I'm going to capture that loss back on my cash side. That's not speculation. That's hedging. And that's most of what I do.
It's like as if the basis comes in. And you know, if you buy a cash position and you sell the board against it, expecting that the basis is going to be X, and that comes in, yeah, then you exit that. I always say, Matt, I love when I take a loss on futures. That's when I'm in the best position possible. And as a matter of fact, I purposely left short Julys on, even though I felt, as you know, I've been bulled up. I purposely left them on, and I told the head office, I'm going, I hope we lose a lot of money.
You know what they call that, Greg? That's reverse speculation.
Double speculation.
That's just called curmudgeon-y right there. I mean, you're just going to prove a point, aren't you? But no, I mean, basically, the final thing I was going to say, Greg,
there's so few on, Matt, that it's a rounding error.
Yeah, right? No, I get it. But the final piece of the puzzle is if you have an idea and you have a plan, which you should have those two things first, and then you have to be patient. A lot of people aren't patient and they get jumpy and they get, they overthink it. It's like, look, why did you do the trade in the first place? Yeah, you just got to be patient. Let the chips roll around on the table for a while and see what comes out. The guys that get like fly by night, this is where I consider it to be speculation. Oh, they want to sell the board as a hedge, and then 2 days later they sell their wood that they were hedging, and then they wait, they hold on to the other side of it. They don't get out. They don't have a disciplined strategy, and you should stick to your plan is what I'm saying, and be patient.
So really,
you want to talk about housing starts?
Well, I wanted to.
I just want to summarize it based on everything y'all just said. Basically, you have to identify what side of the market you're on, understand your risk, and develop a plan. I mean, that's as simple as it gets. And I think that's having people
still doesn't work.
100%.
What's that? What's that, Matt?
And sometimes it still doesn't work. Like you just said, you talk about a plan and your strategy, and you still. In your case there, Matt, you still lost $18,000 on your futures position and you just had to liquidate it. And that's part of the plan too. You just sometimes it doesn't work out perfectly and you got to have an exit strategy and just.
Yep.
And like the most important thing too, Matt and Charles, Greg, that I've always, learned when I was trading with the guys in Houston. It's when you make money and you know why you made money, that's great. But when you lose money on something, um, you can be right and lose money sometimes,
Yep.
and you can be wrong and lose money sometimes. But you got to know the difference when you lose money, why it happened, so you don't repeat the same thing. And that's always hard to do. And the other thing is, you can be in the business for a long time and do it forever, and you still make mistakes and lose money, right? I mean,
Yeah.
To expect that you're never going to lose money is just unrealistic. It's going to happen.
If you're not losing money once in a while, you're not even really pushing yourself to your maximum potential, right?
Exactly. So
Ding,
let's
It's the
talk.
90-10 rule. You should have 90% winners and 10% losers. And if you're not achieving 90-10, then you're not trying hard enough.
I'll take it. I'll take it.
So hey, the cash. We'll do the cash market first, real quick, and the different species, and then we'll jump into the main.
Yeah, I got it
housing
because I got
part.
all the housing start stuff here.
So cash on spruce. I know spruce has been eastern western spruce is obviously taken off pretty good. What I've noticed, at least on the east side, is it's a lot harder to buy lumber, especially what you want to get a good ship time, and things are getting out there. 2x4, 92 and 5/8 stud, 2 and better, 104 and 5/8. Everything's getting an order file. People are buying. We're having good sales days. Print is not out this week. It's probably out Thursday, right? They're only going to have one. But anyway, we're
It's a
obviously
holiday week.
we're obviously up on stuff in spruce. So Matt, what are you seeing on the Pacific Northwest? I did notice the hem fir and Doug fir studs really took off in the last 2-3 weeks.
Yeah, studs have been good. They sort of led the charge here, and I think we've been talking about that for 3 weeks. But Dimension finally got a real pop this week. Western, dry, spruce, hem fir, WW, Doug fir, you name it, anything dry. The 2x4 and 2x6 prices are up about $25 since Friday. Real, and the order files are being extended. We're into like week of 7.6 and 7.13 now. Rail cars are becoming a problem too, because all the mills are getting busy at the same time and they all need cars. They went from not needing cars 2 weeks ago to now they need 50 cars each, and the railroad's not going to be able to keep up with them. So we're going to have some delays in shipping. We know about the trucking problem already, so that's not going to change. There's still expensive trucks and tightness in supplies on certain lanes. But yeah, we're having a real rally this week, dude, across the board, green and dry. Like green Doug fir, I didn't mention this last week, but it got down to the cheapest species in America again, which when it does that, it usually pops, and it did. It's popped probably $40 off the lows from where it was, a week ago. And things are really, really active even today. I mean, I barely had time to hop on this thing. I'm swamped. So I don't even think this is maybe the third inning, Greg. Last week I thought it was the first inning. Maybe we're in the second or third now, but I think there's a lot of empty bins out there that need to be filled up still, and guys are just scrambling around looking for the same old, but they're settling. If you don't have what they want and you can't ship it when they want, they still give you a PO. They counter you $5 and then you just say no, and they just settle. Okay, I'll take it. So that's a change in behavior that we've seen.
So, Greg, I heard you on the phone talking to somebody today. Where is my lumber? This is 3 or 4 weeks late. And, I mean, we've noticed it's been harder to buy from mills. What's your feeling on the market that you trade?
Well, I mean, I will say, the easiest thing to do right now is sell lumber to Matt's point. Pretty much, anything, if you quote it, you sell it. And our biggest challenge is, we've got a lot of lumber that's late from mills. I've got cars that have been sitting outside reloads for over 2 weeks, and trying to get them unloaded. I mean, it's no secret that I've been pretty bulled up about this market for several weeks. And to Matt's point, I mean, we're going higher. Whether the high is the first or second week in July or the first or second week in August is is really my only debate. And is it $20 or $30 higher, or is it $120 or $130 higher? I mean, I think what the market continues to tell me, at least on spruce, is that end use consumption is outpacing production and anticipated lower production that's coming as we get into summer shutdowns. We're still in this supply driven market. I guess whenever you're ready, we could talk about the demand side, because we got all that data today.
Well, so we talked about. Here's my question, Matt and Charles: are we is Southern Yellow Pine having a rally? Is it joining this? Is it joining the party?
You go, Charles. You're muted.
I think he's deferring to you.
Here's what happened in Pine. Nobody could get trucks. 80% of the stuff moves by truck. So everybody started looking for delivered prices, even brokers. Everybody wants a delivered price. And I think the value of the product went up about $40 over the past week, primarily because of delivered prices, not necessarily mill prices. But the mills have now jumped on, and they're adding to that too. But I really think that the biggest thing is the last 6 weeks have been the most, from a historical perspective, the most downside potential of an 18-week period from week number 18 to week number 32 or whatever it is, the end of August. But long story short, we've already completed our worst part of our most aggressive part of the down cycle, and now the cycle kind of flattens out, because we're just wrapping up the biggest demand period, which is May and June. We come into July and August, where demand should be significantly less compared to May and June. But everybody's prepared for that. So when you end up like what Matt was saying, everybody's got light inventories, and there's a supply disruption with trucking and curtailments and production limitations. And then you've got inventories having been liquidated. So you've got a place where the market is coming into a lesser demand period, but it is underbought for anything that would continue like it is. So I think the big question is for buyers is, are we going to see the next 6 weeks be as strong as the past 6 weeks? And how does that level up against the supply disruption? So my suggestion today is, whatever your leanest position is and whatever your heaviest position is for inventory, I don't think you want either one of those. You want something in the middle. And I don't think that people are positioned in the middle. They need a little bit of wood to get that middle position.
I think you hit the nail on the head. I mean, the trucking issue is somewhat being addressed to a certain extent. I mean, people are more used to, and I use air quotes when I say that, the aggressive freight rates. So I mean, it just kind of is what it is. Whereas 8 weeks ago it was no, I don't want it, and then it's I need it in 48 hours. There's still a cost of expeditiously executing anything from point A to point B, and it's pretty extreme, anywhere from $20 to $30 depending. The one thing I will say from a historic perspective, to kind of key on what Matt said, I mean, if you look at the past 3 years, I mean, into June all the way through July have been, tremendously, strong as far as downside, right? I mean, I think we had the big collapse after the tariffs last year. We went from, mills were still shipping $600 wood that they sold 3 weeks prior, and they were quoting $400, right? So it's it'll be interesting to kind of see how it shakes out. This new correlation between spruce and pine is going to be interesting as well, because over the past couple of years, and Ash, you and I and Greg have talked about it, they were contra, right? So one would go up, the other one would get depressed, etc. But with the Midwest and the secondary markets being more competitive on a delivered basis via spruce than pine due to $6-7 a mile, it'll be interesting to kind of see how it shakes out. And to Matt's point, I think there's more people that need wood than don't. So it's going to be a tap dance. Honestly, it's going to be a tap dance.
I mean, one of the wild cards on on the market is going to be what happens with freight over the next 60 to 90 days. I mean, we clearly, I mean, that March through May time period is a historical time when freight does tighten up. And then we had, the skirmishing, the skirmishing in the straits. And you've got crude down to in the 70s now, and we're starting to see, starting to see fuel prices, gas and diesel, trending down. How much is that lower cost going to help with freight versus the other factors that we've already talked about? Crack down on who can drive, the number of drivers. That's going to have a resolution.
Yeah, I think this probably matters more by the end of August than it does today. Now, I think right now what's happening is you've got low inventory in the field combined with pretty good activity in the field. So I was talking to a couple guys down in the south that I sell to, and they said, hey, we were surprised by May, and it looks like June's off to the same rate as May was, which for this time of year usually gets a lot hotter. Well, I was just down in San Antonio on Thursday, Friday, and it was like 93 degrees and it was pleasant. It wasn't 110. So
it's a dry heat.
Yeah, but you could work in it, dude. I mean, there's been times where I've been down to Arizona or Texas or even Colorado where it's 105, 110 and it's miserable. You see guys work from 5 a.m. to 11 a.m. and then they're done for the day, and that's not happening right now. They're still busy and they still have low inventory. So until
you can't fry your eggs on the highway.
That problem has to solve itself, and in our business, that problem doesn't solve itself in 1 week. It might take 8 weeks, but it's gonna take a little time. Like what you said, maybe it's end of 1st August when we hit the high. You just never know, Greg.
Right. Yeah. No,
but not today, and not the end of June.
No, I mean, a really wise trader, now a good customer, told me, the market has to stop going up before it can go down.
So
housing starts, Ash?
Yeah. So Builder 1995 on YouTube was asking, what do you think about housing start data yesterday? Home builders and material ETFs barely moved. Lumber also flat. Is lumber really flat? I don't think lumber's. Maybe the CME he's talking about.
The headline number on housing starts was a big miss, right? It was 1,177,000, the lowest rate since 2019, other than I think there was a early COVID number that went down. So when I dig into it and I look and I go, oh, well, that's because multifamily dropped 41% in the month over month. And I go, oh, wow, that seems like a lot. But then I look and I go, oh, wait a minute. For the first 5 months of the year, multifamily is up 15.1%. So I chalk last month's number up to kind of the, housing starts are, highly, like there's a high standard deviation, and, the numbers can be pretty volatile. Year to date, housing starts are basically flat. They're down 0.9%. Year to date, permits are down 2.6%, with single family being down 6.4 and multifamily being up 7.5. So what that tells me is that the demand picture is exactly what we've been talking about for what seems like ever, is that demand is flat at the level that it's at. And there's nothing that says that I can look at that says it's going to be, a huge drop off from here, or even, I guess I'd say, we could have a marginally it could trend a little lower, and marginally it could trend back a little higher. But that when we look at the end of the year, our housing start number is going to be very much the same as last year's, which was the same as the years before.
Or we could strengthen going into the fall. I mean, look, if energy prices continue to drop, that might free up a little bit of more economic activity. You never know. You never know, buddy. Things aren't as bad as people want them to be. That's for sure. And
who wants
and
it to be
this-
bad? I mean, I just want to look at one thing is, just to highlight how fortunate we are where we are. SpaceX went public last week, is a $2 trillion company. Elon Musk, there's like something like 4,400 millionaires were made as a result of that. And there was several new billionaires made as a result of that also. And just like where else could that happen? I find it appalling, all of the people that are out there like trying to like spin some negative aspect to that. We should all be celebrating. And you know what Elon Musk is going to do with his $1 trillion of net worth? He's going to continue investing that and making America even greater. I mean, he wants to go to Mars. He's gonna be implanting chips in people's brain to cure all sorts of diseases. This guy is absolutely. We are so lucky to have him. And you know what? I think he should have a net worth of $2 trillion. So Elizabeth and Bernie, suck on that, will you?
Don't stop him. He's on a roll.
I heard yesterday that Elon Musk made more money in a week than Warren Buffett made in his whole lifetime so far.
You know what? He's just going to keep.
Hey, Greg,
I'm just going to keep investing in making things better. I'm not saying that I disagree with you, but I saw an interesting article the other day as far as the value of SpaceX and the fact that I think they compared them to Walmart, top line revenue and market cap and worth and all that. And I think SpaceX did like $18 billion. And I think Walmart did like 200 and something. So, I mean, if you put it into perspective in the industry that we're in, that's like saying BFS is worth $1 trillion. I mean, it's kind of crazy.
I didn't want to address the valuation issue. A lot of things. I mean, do I think that Ashley and I had this discussion yesterday. I mean, do I think I'll be able to buy SpaceX stock a year from now at less than today's price?
100%.
Probably. And that doesn't mean it's not going to be a great company. It could. SpaceX.
I'm not saying that either.
SpaceX stock could fall 50%. It's still going to be like one of the greatest companies ever. Yep. I mean, it's just way out ahead in terms of evaluation. It's like if all of a sudden, tomorrow 9-foot studs went up $500 a thousand.
Kind of like 2 before 16s, Greg.
I bought SpaceX yesterday, the day before, and I bought some more today. And if it goes to $100.50, I'll buy more then too.
My experience of listening to this show is you should take the buy side of Ashley's sell. You'd have bought all that crypto you were getting rid of.
Hey, I've been buying Tesla forever too, so I'm very much long Elon right now.
I mean, wow.
So Ashley, one of the things I have appreciated about my friendship with Ashley for the last 26 years is that I think he knows markets a lot better than, maybe he lets on. So let's hear your review of the big picture here, dude. You're just sitting here moderating. Let's get your opinion about where do you think we are and where do you think we're going?
Appreciate you asking me that. Well, what I think, sometimes it always takes me a little bit of coaxing, pushing, and I told Greg yesterday, we can talk facts all we want about stuff, but I kind of have to see what's going on. Like a month and a half ago when Greg was telling me this thing could run to 700, I was like, that's bullshit. There's no way we're going to 700. And I was kind of on the side of the customers, but as I saw stuff play out, it probably took me a couple of weeks to jump on board. So what I see is I can only react to what my customers, mills, what I think their feeling is. And most people, I think, have been negative housing, negative the market, talking about inflation, afraid to buy inventory. And I think they continue to be that way. I don't think you're going to change buyers wanting to buy just in time inventory, and which leads into distributors like us having value. Like I said, inventory is an asset. So the way it feels right now on the spruce side, and from what I hear on the hem fir side, I don't know yet on the pine side, we're probably going to run over the next, through July 4th into the end of July. And on spruce, if you look at a CME or a Chicago 2x4 price, probably hit $700 $1,000, and then everything relative around that with all the different items will adjust to that. That's what it feels like today. I mean, here's what yesterday, Greg and I are getting in heated discussions about selling too much right now. And what we're coming to,
I had to call him like at 8:30 at night and go, "Hey man, you know what? That was actually a really good order you took."
So
I don't know why. I don't know why I was like, why we even had words over that. It was like it was really good.
Should have gotten 2.
The way I talked to
Greg,
he
sold 10. Don't worry. No, he sold 10, and it started because I go, I don't know if I'd sell 10 at that price, but
and I
with some POs.
He's a big lot guy though. He's a big lot guy.
No, my response was, "Damn it, Greg! I've been buying for you for the last 2 months. I want to sell something, and I don't care."
Yeah, can't you just be happy for me?
That's funny.
And no, but my point is, when we're getting into heated discussions about selling too much at like the biggest numbers we've sold at in a long time, I mean, it's either the top of a market or we're still going. So it feels the market.
Well, not necessarily. It's stressful right now. You guys are shipping a lot of trucks, and trucks are not easy still, right? And you're already behind, and you're getting your cars in late. So yeah, it's not just simple to just take a bunch of POs and ship everything tomorrow, like people want it to be. So it makes your job more stressful because there's so many more pieces.
We're still selling prompt lumber for 3-week shipment. I mean,
I'm saying though, like you got to manage that.
Something from us today. It's the week of 7/6.
Matt, to sum it up, with that little person on my shoulder that always gives me bad advice, keeps telling me how bad shit's going on in the world and how bad the market is and how overpriced stuff is and inflation this and inflation that. And the other part of me is throwing POs out to mills paying 20 or 30, $40 more than I paid last week, and then selling above that price. And in just, I know over time, if the market just from speaking of so much experience the market and sitting next to Greg and you guys, that it feels a lot better than I think what the people on the other end of the phone that I'm talking to. Some of them are some of them are reluctantly buying and paying bigger numbers than they have to pay when they had to pay before. And we got carload buyers calling us and wanting trucks the next day. And that doesn't mean they have cars rolling in. That means that they thought they were going to get a better deal from somebody else, right? And it's not out there. And so Greg made the point to me, how many people do you think have this much inventory sitting around that they can ship like we can? And I'm like, I don't know. I mean, I guess after some of the transactions yesterday in the Midwest, Northeast, and South along the eastern states, maybe not as many as we think.
Well, Charles, how many of these yellow pine mills switched over to rail cars that are having trouble getting that wood to the customers? I mean, that's having an impact. I had a guy that buys yellow pine call me back in a frantic frenzy an hour after I hung up with him in the morning yesterday and just capitulated on 2 cars of a Western species that he had told me an hour ago that I was way too high on. And I think it's because, and he didn't tell me why, but I suspect it's because he can't get the wood from the yellow pine mills.
I mean, cars are on a 3-week delay. I mean, to Matt mentioned it earlier. I mean, 80% of the market historically moves by truck, and now all of a sudden, you're talking about a freight difference from an Alabama mill to Indiana between car and truck of $45 to $50, sometimes $65. It mill runs out of car allocations, and they continue to sell cars because it's freight positive to do so, right? And the customer's willing to pay the number and wait, right? Then it ends up in a position to where the car gets delayed, they don't get the allocation, whatever the case may be, and they have to hop back in the market and pay the $115 freight bill versus a $60 freight bill. I mean, it's
and most Southern Pine consumers don't even have a rail siding.
100%.
You know, there's not a Lowe's or Home Depot in the country other than their distribution that can take a car, or in most truss plants in the South can't receive rails. There's a large volume of folks that just can't do it.
Yeah, you know.
So I was going to come out with like something, you know, an observation for people is what I think. The other thing I think is that I've been seeing this, and I think it's going to accentuate as we move forward, the relative strength of whitewood studs compared to dimension. And my rationale is studs is something that there's not that much yellow pine production of, or like really, like people don't really want yellow pine studs in a, you know, in a as widely.
Careful.
No, hey, look, I don't want anybody to cut them. I don't want anybody to buy them either.
I mean, you know, listen, we know.
I like it better that way anyway.
You know, but there's in particularly this time of year, you know, there's a lot of people that would push the envelope a little more during the, you know, the cooler months. But I mean, we all know that, you know, there's a finger joint being the exception, but you know, that's a narrow market for that. But there's very little European studs coming in. It's primarily, you know, 2x4 and 2x6, 16-foot dimension, right? And we've had a disproportionate cut in Canadian production of studs. So I think those things combined, and you know, we're seeing it with what's happened with, you know, Matt Western US, Hem and Doug here recently, right?
Yeah,
Hem and Doug.
You know, basically, you kind of sum it up this way: is it harder to buy or harder to sell right now? Well, it's harder to buy, and so you know, if we're feeling that, then our customers are feeling that also. It's easier to sell, harder to buy. At that moment when it becomes easier for me to buy again, then I'll probably slow down my roll. But until that happens, and like I said, I think we're like in the third inning at the best. Yeah, people should be buying more wood, even though the prices are up. So that's going to drive these things higher. I know the board's taking a little bit of a pause here, but it wouldn't surprise me if it gets another shot up to, you know, 640, 650 range here pretty soon. But we'll see, dude. It definitely feels a lot frothier than it did 2 weeks ago, for sure.
Hey, for you guys, all you guys, since you're selling people that I'm not, I'm just talking to people who are buying. Are you selling people 3-week shipment in addition to, so are they building inventory based on getting the wood in 3 weeks, or is this just they're getting just because that's all
staying in the shipping file, I think is what it is, really. I mean, you know,
if you got to buy 3 weeks,
we're trying to stay caught up, and you know, we're probably 80% there, but we're still, you know, 20% late due to slow inbound and, you know, tightness to certain delivery points. But Matt, I think it's like, you remember when like the OSB mills were selling, you know, 8, 10, 11 weeks out, and you know, every week the buyers had to come in to stay in the shipping file, because you can't, I mean, because what's the number one job at a retail lumber buyer is what?
Don't run out.
Don't run out. Doesn't matter what price you pay. It's like you don't run out. It's like if you're a corner grocery store, you don't have, you know, if you don't have beer and zins, you're out of business.
Whoa, that was a jab. That was a little underhanded there, buddy.
There you go, Ash. That's what it's the zins that he's got going on.
So you know, the other thing I noticed, Matt, too, we always talk about this. The other thing I noticed is the mills aren't calling me right now. The guys that were people that were calling me every day saying, you know, you got to ask 3 or 4 times for something, but you do that because you find out how fast the feedback comes back too, and then kind of
there's still some horse trading going on certain items, but the amount of volume of those types of items that mills are talking about on a day-to-day basis is like 1 out of 100, where in a flat market or a down market, it might be 50 out of 100, right? So right now they've got one car here, one car there, maybe a truck of this, truck of that, that's sort of shrapnel. But 99% of the stuff that's on their list is 2, 3, or 4 weeks out. Prices have been raised, order files have been built. I mean, they're finally feeling comfortable. So when the mills start feeling that way, you're going to have to call them to get quotes. They're not going to call you. They're not going to bug you. They're not going to send you a bunch of emails like, hey, we need this, give us an offer. That's not happening. So, and it's not going to happen through at least the 4th of July at this rate, and probably even further based on my sort of gut feeling about what's going on.
Have we already priced? Have the big retailers already priced? I guess they have. Or Q3 now? Is that where are we at in that cycle?
End of this month, I think.
End of this month. Yeah, no, it's like, I mean, and that's another thing that ends up happening, right? At the end of the quarter, because there's a tail, right? I mean, once the big guys get their new pricing for next quarter, they're going to look, wow, these prices are a lot higher than our current prices. And, they kind of pull some stuff forward. So that causes at the end of the quarter and the beginning of a new quarter, a kind of a further kind of pull on.
So what you're saying is retailers that have a contract where they can back end load something with an extra amount, they actually would do that when the market goes up and they get the cheaper price?
No. I'm talking about the builders have a lag at the end of the quarter.
They'll take extra wood from the retailers.
They'll load up on
they'll
that.
release more houses late in the quarter, in the beginning of the next quarter, before their new prices kick in. And so, if there's going to be a slowdown, that's going to come like in August, right?
Mm-hmm.
From the big builders.
Yeah. And Matt, another thing to your point, 2x6 is still ripping pretty good.
Which Matt?
You Beamer, especially studs and dimension, all different.
Yeah, you said what? It's an 18-month cycle.
Yeah,
is that what you said?
Yeah,
and we started that in November.
Yeah,
so we got until next April, May.
Yeah, we're ripping. We started it. Yeah. Yeah, well, I mean, we're getting in the late innings of it at least.
We're not even halfway through an 18-month cycle, dude.
I'll have to pull that up and look at it again. But not a Matt Lehman. Can you tell us a little bit what's going on over with you besides being on vacation right now? What's the Lehman's guy doing? What
sort of thing? No, it's actually this is probably not a good thing for me, but I think the industry, after 40 years of listening to me rant about cycles, has kind of got the hang of it. So, there's not many people that they'll go, okay, so the summer's slower and the preparation. All my things about preparing for what you expect next, and I think that's what's got this market confused. Is the builders and the dealers expect that the market's going to, like Charles was saying, we're in that cycle where July and August are a down cycle for most of the time. But we've never had, to my knowledge, the supply disruption that we currently have that's permanent. We've never had this long a disruption for transportation, for trucking especially, which seems to be a chronic issue. So you're trying to deal with things that look more permanent than temporary, adversarial kind of things to have to deal with. And I think that's what's got people at this point buying a little more than they normally would, just because they see that these temporary disruptions are at least more lingering than typical. Even than COVID. If you think about COVID was a sharp spike up, sharp spike down. This has just been a steady climb going against the grain, going higher. Mm-hmm. And I think it tells us where we are from a capacity and a supply side that the supply side is going to be Katie bar the door when it starts to turn the corner. So whenever that 18-month cycle is that you're talking about goes over, I think we're gonna be in a strong uptrend. And Greg's $700 is going to be a good buy at some point.
if you know, I mean, if you buy the thesis that with what's happened over the last 24 months, that lumber available to the North American market is uh, is less than end use consumption at the current time, then we're going to go to the place where we do get more supply. And where is that price? I mean, if you're a spruce mill today, it's probably still what, Matt? What do you think? Another $100 higher?
Maybe at 700 Chicago, they've got a chance. That's with
Okay,
all the
so
taxes and
That's
everything.
what the Europeans need to be too. It don't need to be $700 at the port to make it worth their while to come back and play.
I mean, I think they actually need, more than that to really ramp up. I mean, I think it's maybe more 750-ish. I know in the East that, you've got some mills that maybe some mills, like 8-foot stud mills may be close to break even here. The dimension mills are probably still, $100 away, $80 to $100 away. What about U.S. West at the current prices, Matt?
Profitable. At
Marginally
700, it'd be very profitable. And I think that Charles's region would be pretty profitable at 700 also. So, the only winners in this scenario are the U.S. producers, really. And, there's going to be some relief here in the fall with the new lower, I guess Kip said it was 12% net lower tax rate that's coming. So that's good, because I don't know, I'm kind of biased. I feel like the Canadians should have more of a level playing field. I feel like we've kind of gone a little too far in the taxation. We need the lumber. We need the lumber. We need those guys to supply the wood to our country. So
if you go to $800 a thousand on Canadian spruce, you will be rewarded with a nice kick in the balls and a higher tariff and tax rate in the future.
Yeah, I don't agree with that personally, but like I said, I'm biased.
That's like a 3-year lag from that price, though, Ash, and it's the average price over a long period of time. So the lower prices earlier this year,
I'm with you on that.
But the problem in the West,
do you guys think there's going to be an increase in demand or an increase in production first?
I mean, like if you had a substantive increase in, I mean, and I don't even know, I'm like going, hey, if housing starts just moved up to like 1,450,000 to 1,500,000, you'd have $800 2x4s, and you'd have like $900 like 9 2x4 and 2x6 9-foot studs. Hands down.
I mean, you always get more production in the second half of the year than the first half of the year, Matt. So, I think that will happen again. But I also think that there's a strong possibility that demand's going to continue to rise through into the fourth quarter, for good economic reasons, and just, 1.3 million housing starts isn't exactly a huge run rate for all of our careers combined. It's been 1.4, 1.5, and we've hit 2 a few times. Mm-hmm. So we have room to go up a little bit on the demand side. For sure, we're going to see a little bit of a production increase going into the fall and throughout the, once you start getting into the bad weather in late November into December, then things will slow down again. But until then, it's going to be, I think, all systems go with Western lumber. And if we hit 700, then I think the Canadians are going to, I can't speak for the Eastern mills, but I think the Western mills will start to feel like, hey, we got a chance now. So yeah, definitely higher on both of those is my opinion.
So I guess July at 630 is a buy. Is that what you're saying?
I guess so.
I think
this is not advice.
Yeah.
Yes.
I mean, if you're talking 700, Greg, you're going to make $70 a thousand on it. That's reverse speculation.
Well, it's funny because Ash and I talked about, like, when it was in the 590s, we're going, really, the thing to buy is the board. And we go, yeah, we just can't do that because and this is the discipline in it. We didn't do that because we're already long so much cash lumber that it's like, hey, you know what? We just can't be Texas hedged. It's just that's being undisciplined, right?
Yeah.
If we had no cash position, then it would have been, oh, okay, this is a way to buy cash, right? But
Yeah.
I mean that's like, I just look at that as going, hey, that's kind of one of the things where it's like you need to be disciplined and not react emotionally to.
I mean,
what's in
Ashley was
front of you.
famous for the Texas hedge, man. He used to call me up and brag about it. Got a hunch by
You
a
know what they
bunch.
say about, hey, bulls get fed, bears get fed, and pigs get slaughtered.
Yeah.
We had a hog farmer in the office the other day. So
All right, boys.
All
See
right,
you
guys. Thanks,
Cheers.
Matt.
Thank you guys.
Y'all be good.
Thanks.
Good
Thanks,
day.
Matt.
All right.
Take care. Cheers.